stock in focus now is Titan. S. Subramaniam, the CFO of the company, joins us to talk about the earnings this quarter around. Mr. Subramaniam, good morning. The stock is actually down because despite the income going higher, the margins have actually crunched down this quarter. Tell us what took place.
Yeah, I think we've explained that in our investor presentation as well. I think the main reason was that if you remember the stock, the revenues shot up significantly because we had to redeem the Golden Harvest scheme prematurely because of the new regulations under the Companies Act. Now, what that also does is that the entire discount that we give on that scheme got bunched up in one quarter. So that, along with certain other discounts that we gave, contributed around 59 crores in this quarter alone. So a major chunk of that was because of the Golden Harvest impact. The other thing was that we did have an issue on inventory valuation. If you remember, we've talked about premiums in gold prices over the last year plus after the import curbs came in, and these premiums have been ranging around $75 to $100 per ounce. We have to inventorize this. Unfortunately, we cannot charge it off during the period at which we buy the gold, and therefore, as we are inventorizing it, the charge to the consumer happens at the same time as the gold prices, as the premiums are high in the market, which means there could be a time lag between revenue from the customer on this premium and the charge to P&L. So what has happened is, in this quarter, the last quarter, the premiums came down very, very sharply to around $10 to $15 as the supply of gold eased over the last 2 to 3 months. Therefore, while the collections from the customers was in that range, $10 to $15 range, the charge was in the $75 to $80 range to the P&L. So this is a mismatch. We don't expect this to recur. At this point in time, the premiums are generally between $15, around that range now. So if it continues at this, it should not recur. So it is basically like the revenues came in a quarter or two earlier, and the charge came in a little later. So it's more of an accounting issue. So we are not concerned about that. Otherwise, I think the margin has been quite good. If you look at the studded ratio, has been very, very good, 35% on a very high base. The overall growth in studded jewelry was 48%, and that's amazing. So I think the margin-wise, I think we are pretty much intact. These are quarterly aberrations that.
So by the end of FY15, what kind of a margin do you think Titan can close the year with?
Well, it's going to be difficult to say that. However, what I can see and maybe predict is that in the next 2 quarters, margin should be better. There are 2 reasons. One is the hedging, the international hedging impact, or the benefits of that would come in over the next 2 quarters, starting from November onwards, which has not come in the previous quarter as well. And the other thing would be that without the Golden Harvest scheme, the discounts will be lower on sales, and therefore margin should be slightly higher. So one is hoping that the margins will be much better than what we've seen in Q2.
Okay, Mr. Subramaniam, good morning. Good to have you with us. The Indian passion for gold became a craze over the last 5 years because of international reasons. Now we will normalize. We'll be passionate, but not as bad as it was or as crazy as it was in the last few years. What is the sedate volume growth, that the sustainable volume growth in jewelry that you are looking at FY15 as well, but more importantly FY16?
It's again very difficult to predict that because it depends on gold prices. The gold prices have been soft in this current year, and therefore we've seen significant volume gains. The other reason is last year, if you remember, we had stopped selling gold coins, and this year we started that again. I mean, we didn't have an issue with that. So therefore volume gains have been good. So it's a little difficult to predict volume gains, but what we are seeing is that people do tend to spend on a budget, and therefore. Hello?
Go ahead.
Yeah, sorry. People do tend to work on a budget, and if it gets them more grammage, they tend to buy it. So particularly with the wedding season coming in now, one is hoping that grammage growth will be decent, as the gold prices have been quite soft in the last 3-4 months at least. Yeah.
Okay. What about the watches segment? What kind of trend are you noticing over there? I understand that it's been a 9% volume growth in this particular quarter.
Yeah.
So
yeah, we had a good quarter two for watches. Of course, there was also this sales promotion we had during the quarter, and a volume growth of 9% was quite good under the circumstances. But what we've been also saying is that the Diwali season has not been great. It's been very, very tepid. While we expected it to be much better than last year's Diwali, we are quite disappointed there that Diwali has been quite lukewarm, and so there is some concern that the discretionary spend is not really back, and I think it stands out that many other companies also are reporting very similar trends. So I think we are not really back into high spending, and it's going to be at least a few quarters away.
Okay. What are you expecting by way of volume growth, both for watches and jewelry, say for I'm just repeating my question because I don't think I got a numerical answer from you. For jewelry and for watches.
No, I don't give numerical answers very
No, not very specific. Yeah. I'm just asking. You've got an economy turning. You've got probably discretionary spending returning. At the same time, the shine for gold, the passion for gold is declining. So you should be working with some kind of a volume growth in mind.
No, we don't work with that. We more work on revenue as a thing, and we still think we should grow on a revenue basis. The only impact that we are going to see in the next 2 quarters is that we don't have the Golden Harvest scheme.
Yes.
Revenues coming in from that, and therefore to that extent, how much are we actually going to do over last year is going to be a big question mark. Don't forget, Golden Harvest used to give us 30% of our revenues. So you are going to have a revenue for the next 2 quarters without this major scheme, and therefore we are going to face problems for the next 2 quarters as far as gold is concerned.
Okay.
Now, if we were to look at it on a without Golden Harvest scheme basis, for example, if you take the Dasara to Diwali season, I think we've done very well. Our growth has been almost 40% without coins and without Golden Harvest.
Okay.
So it's been good, but on reality terms, I think it's not going to be great because 30% off a base of last year is going to be very tough to emulate. So even if you grow at 30%, it's just going to be catching up with last year. So this next 2 quarters for us will be tough in that respect because of the Golden Harvest not being there.
Okay.
On watches, I think it's going to be soft. I don't think it's going to be very bullish. We are not very bullish because I think the economy really hasn't turned.
Okay. Just a 2-part question on the margins. One on watches. The EBIT percentage in the watches segment has been very high at 13%. Will this also slow down, given that you're expecting the demand for watches to slow down as well? And second, if you could quantify how much will the margins benefit once the international gold hedging kicks in?
As far as watches is concerned, 13%, yes, is a little high this quarter because we had a good growth on top line. And if the top line growth is going to soften, then I think we would be between the 11 to 12% margin. So that's what I think we would possibly do in the next 2 quarters. As far as jewelry is concerned, yes, the margins, I mean, the benefits of international hedging will kick in from sometime in November for us. And that would be a fairly good percentage. I think up to 1%, etc., that you should look at on an EBIT basis.
Okay. In your studded jewelry segment, your share has come down a tad bit. How are the promotions doing? I mean, you've undertaken a lot of promotions. So what's the status?
Yeah, I think I explained that earlier. We did a 35% studded share in a quarter where the sales was 65% up. So the growth in studded was actually very, very high at 48%. So we actually did very well on studded. As a percentage, it's lower only because the base was very, very high. I think we are very happy with the studded share, and the activation did go very well. And the good thing was, even when we did the Golden Harvest redemption, as we had to force customers to buy it, almost all of them opted to buy jewelry, and a lot of them opted to buy studded jewelry. So that was a very good sign.
Point taken. Thank you very much, Mr. Subramaniam, for joining us and explaining all those details to us.